Now 5V have got an esteemed track record dating back to 2016, and they've been able to deliver some outstanding returns in private equity. In 2023, 5V launched the 5V Horizons Fund, which is a new way that you can access Australian mid-market private equity. It has low minimums, there's no long lockups, and importantly it's available on platforms and it has quarterly liquidity. The other really important thing is this is not a cash box. When you invest in 5V Horizons, your money is immediately deployed across 11 proven businesses with positive cash flow. Just before I hand it over to 5V, the other important thing just to remember about 5V is that they're very different to most private equity players out there. Most private equity fund managers are out there to strip costs out of a business and leverage them up. 5V are looking to genuinely grow the businesses that they invest in. So please welcome Tim Cooper from 5V to take you through the compelling reasons why you want to invest in Australian mid-market. Welcome, Tim.
Thanks, Mark. Hi everyone, thanks for having me. So my name's Tim Cooper, I'm one of the managing directors at 5V Capital, based here in Sydney, focused on our private equity strategy. So today I want to talk to you about a couple of things. I think one is we'll touch on sort of why private equity. I think that's been sort of covered a little bit in the introductions, but I'll sort of double click on that. Second is sort of mid-market within that. I think why, from a 5V perspective, we're so excited about that part of the market and why we think it's such a unique opportunity and asset class to be able to have in your portfolio. I'll try and sort of bring that to life with some sort of real life examples, some of the founders we work with, like the people on screen. And then I'll touch quickly on Horizons, which, as was said, is a way to be able to access this for people such as yourselves in the room. I think the first point is, why do we want to invest in the mid-market part of Australia? Australia is a big country, but made up of lots of small businesses. And so when you think sort of top-down thematically, where would you like to be deploying capital? Where would you like to be sort of investing your own money? You're thinking about sort of thematically, what are the parts of the market you'd like to be accessing? And there are things like sustainability, for example, to use the example that's on screen. This is Richard Fine and Gary Smith, who are the two founders of Biopack. Well, if you want to play ESG, sustainability, specifically sustainable packaging, it's actually very hard to find a way to do that. It's particularly hard to find a way to do it investing in profitable businesses. Biopack is a business based in Bondi Junction. It's a market leader in sustainable packaging. The business has been around for 15 years, and it is a recognized global leader in what it does. But you've got to be able to go and find those. And so I want to talk you through around how we've set up our entire business to be able to go and identify these types of opportunities and put together a construct that allows us to partner with these founders and ultimately drive great returns, which I'll touch on as well. I mentioned this before, but Australia, like I said, is a big country made up of lots of small businesses, and most of those businesses are private. And so when you think about the addressable universe of businesses that you can actually invest in, we think about that as being sort of 9 to 10 times larger than the equivalent sort of ASX listed universe. Now, the complexity, of course, is that these businesses, these kind of close to 20,000 businesses, sure, you kind of notionally know they exist, but how do you know the ones that are scaled, growing, profitable, and ultimately willing to take on capital? This has been touched on a little bit, but I think sort of within this, I think sort of the first point is private equity has outperformed over a long period of time across all sort of time periods. And this is increasingly well known. I think, again, it was touched on in the introduction. You see people like the Future Fund here in Australia. They've always been very overweight towards private equity because they recognise this point. But actually, when you double click on this orange bar, what you actually would see is that within the mid-market space, that the returns are higher than average across the orange bar, which is to say that these are businesses where typically entry valuations are lower because you're able to engage in sort of proprietary bilateral transactions. Those businesses are growing more quickly, so you're able to generate equity value more quickly. And you also have more exit optionality, which I'll touch on as well. So we think sort of private equity, great, yes, but actually narrowed down into sort of the mid-market space, we think there's really, really attractive returns to be had there. And so there's lots of these businesses, there's great returns to be had, and actually there's going to be more of these businesses that are transacting. This stat here really speaks to that baby boomer generation that has built these businesses, grown them over a multi-decade period of time. They've typically been running them as the major cash source for themselves, and have built an asset of significant value. Now, some of those businesses will transfer to their kids or grandkids, but lots of them will seek a new home, or they'll seek a liquidity event. And we've positioned our entire business to be able to be those people that those founders and business owners and entrepreneurs would choose to partner with. And so I've touched on sort of sustainable packaging. I think another sort of big thematic to try and sort of bring this to life in terms of what we're trying to do and how we're trying to play some of these attractive sectors is, unfortunately, cancer care is a major sector. And continues to grow. And so, lots of you, I'm sure, will know people who've had scans for either sort of diagnostics or treatment. And so the radiology value chain is a very large and growing at sort of roughly 15% a year value chain that serves to identify and treat cancer care. Now, what you may not know is that almost all of those scans require an isotope. And an isotope is a piece of nuclear material which is typically injected into the patient, and that's actually what flares up and shows the cancer, or actually increasingly is being used in treatment as well. Now, what you, again, may not know is that those isotopes are produced in a piece of equipment that sits in a bunker that is called a cyclotron. And that's what this thing on screen is. This is a cyclotron. And the majority of cyclotrons in Australia are owned by a private business called Cyclotech. 5V, we are fortunate enough to be invested in Cyclotech. And that is a business that has been around for a long period of time. It's privately owned, it's very profitable, it's growing at 20% plus a year, and it's only accessible through private markets. You can't go and, again, you can't sort of log into Bloomberg and get access to these types of businesses. And specifically, we were able to identify the opportunity through our network. We were able to strike a deal, a bilateral deal with the owners and founders of that business, solve a shareholder sort of dynamic that they had playing out, where there were shareholders who wanted to continue to grow the business and double down, look at international expansion, and there were others who were more passive who wanted to facilitate a liquidity event for themselves. So again, sort of playing into a large and growing space, and able to do so through mid-market opportunity set. This is sort of how we think, I guess, about the building blocks of value creation. I think sort of the first one is perhaps sounds the most simple, but is in fact the most complex, as I guess I've been trying to convey, and ultimately where a huge amount of the alpha is actually generated. And so we've got sort of close to 50 people who work at 5V. 50% of them are spending all of their time on kind of this first box, or at least a large portion of their time on this first box. So how do we find them? How do we ultimately convince them to want to partner with us? Once we've done that, this is very much a growth-driven thesis. So it's about getting in behind these businesses, continuing to invest in them, whether that's supplementing management capability, whether it's looking at additional capital to look at accelerating growth plans, either domestically or internationally, might be bolt-on acquisitions, could be a range of different things. But the point is, we're thinking about building value in these businesses across a medium-term horizon. So in some ways, the performance of the business in 6 months' time, it's kind of, we're happy to go backwards to go forwards, or, we're happy to sort of look through some short-term investment because we know that we're going to generate a return on that investment over a multi-year period of time. And then I think ultimately, if we can do that, then the theory, and this has indeed played out, is that we should be able to exit those businesses at higher valuations. And interestingly, with the exception of the businesses that we've IPO'd, which has been a couple, all of the businesses that have transacted either to strategics or larger private equity firms, those have all been to international buyers. And so they see Australia as an attractive place to invest capital, particularly once those businesses have been through that, what can sometimes be a little bit of that messy kind of founder transition. They've been corporatized, they've grown, and they're now in a platform that would make sense for an international buyer. And sort of hot off the press this week, we actually just announced that one of our Fund 3 assets, a business called APP, which is an infrastructure consulting business, has entered into documentation to be acquired by Bureau Veritas, which is a very large French strategic buyer. still subject to completion. But yeah, again, I think it's a really good example of a business actually in that case that we carved out from a larger corporate, corporatized it, grew, aligned with the management team, and ultimately were able to sell for a very attractive return to an international buyer. Yeah, and I mentioned that point around aligned with the management team, working with the management team. So again, this is we'd sort of describe this, I guess, as a little bit of our kind of secret sauce or kind of secret weapon, which is to say that when you talk to people from the 5V business, you'll hear us talk a lot about this principle of alignment. And I think I mentioned it at the start, but wanting to explain to you, I guess, a part of the market where we see it attractive to invest our own capital. So the 5V team has committed, across our whole team, has committed about $250 million across our funds, and we're typically partnering with businesses where the management team, and that can be sort of manager founders, but management teams own about 25% of the businesses. And so you've got a very aligned financial sponsor that frankly cares deeply about the outcome, and a management team that remains significant shareholders in the business. And so same thing, ultimately everyone's trying to work together to grow value. It's no guarantee of success, but we think it's an important sort of regulating mechanism, and this is a very differentiated component of the 5E proposition compared to our competitors. So just to sort of give you some background on 5E, so we've got about $2.5 billion under management, founded in 2016, as was said, team of close to sort of 50 people, and very much sort of focused on growth. I think sort of the top left is important. We're deliberately looking to keep our funds under management kind of in that sweet spot where we're able to continue to prosecute the mid-market. I guess the temptation would be you go out and raise a multi-billion-dollar fund, but that just frankly pushes you into a different part of the market where we think the potential for superior returns is frankly just more difficult. And so add all of this together, and since 2016, our realized net IRR has been sort of close to 40%, which is admittedly above target, but we think that given all the things I've talked about, we see that should be able to continue. Again, just sort of trying to bring this to life, really this point around the things being hidden in plain sight. This, I'm sure no one knows what this is. This is a PM54 from the company Pinnacle. This is effectively the ubiquitous piece of technology in Australia that connects the alarm panel in all of your sort of office buildings to whoever does your alarm monitoring. So Chubb, ADT, whoever it might be. There are 450,000 of these sitting in commercial premises, high-end residential homes, or office buildings across Australia. It's a business that generates sort of 90% recurring revenues at very, very high gross margins, pinging back and forward every single month. In fact, so hidden in plain sight that it was only sort of halfway through doing the diligence on this business that someone opened the alarm box at 5V Capital and realized we actually had one of these in our building. And so again, it's just a really good example of how do you go and find these really attractive businesses where again they're just kind of the art is find them first, and then we're obviously working with the business around how can we take this technology, take it overseas, and continue to accelerate the growth in the business. And so again, just taking a bit of a step back, and I'll touch on Horizons in a second, but this is the Horizons portfolio at the moment. It essentially mirrors the Fund 4 and 5 portfolios that we have, so alongside our closed-ended funds. And again, sort of zooming out, I'll sort of touch on a few of the different logos and different names, but if you sort of think about the broad buckets of sort of thematically where you're getting access to. So you've got businesses like Mantle Group, it's in the IT services space, kind of leverage to cloud and data and analytics, AI. 4Cabling playing into sort of data and connectivity. Oracan is a government technology business, so administers parking infringement for most local councils, has the technology solution that does that. Cyclotex I've touched on in healthcare. Fat Zebra, Orbit, these are international payments businesses. And so again, these are really, really attractive spaces where we think that investors should see great opportunity in being able to deploy their capital in these areas. So Horizons, I think, look, working with the team at Pinnacle and I guess sort of trying to play into a thematic that is playing out globally, which is really the democratization of private equity in particular, is we've designed this fund, Horizons Fund, which has the following features to make it relevant for people such as yourselves in this room. I think it's on platform, so no capital calls to manage. We do have redemption, so there is liquidity. Of course, we would say to people, think about this as a medium to long-term investment product, but it does have an element of liquidity. And I think that the sort of top left and bottom right are linked to each other, which is to say that it invests directly in the assets. So what we're not doing is layering in lots of different feeder funds, come in the top, sort of, and pass through all of these different entities. You're investing directly into the assets, which means that the fee structure is very clear and it mirrors the closed-ended funds. The target returns for this Horizons Fund, as on screen, is sort of 15 to 20%. And just over time, but the last couple of points to mention are the product is rated, so both Zenith and Lonsec rated. And this is the disclaimer. Thank you.